Welcome to Bearish Engulfing Price Action. In this video, we're going to cover bearish engulfing, when to take the trade, and the characteristic of the bearish engulfing. Why we are taking the trade, what does the bearish engulfing mean? And let's get started, okay? If you want to follow along, please go to page 16, okay? Please go to page 16 so we could continue. You could do a quick little read while you pause the video. That way you have an idea of what we are going over. And we do have certain things we need to look for when it comes to the bearish engulfing. What I mean by that is, what is it? Okay. What's the bearish engulfing? The price action. Okay. What does the bearish engulfing mean? Please write those down. It will help you out. So what is the bearish engulfing? It's a price action. Okay, that's one. What does the bearish engulfing pattern mean? It means buyers are no longer controlling the market. It also means the market is about to reverse. It also means the market is going to sell. Okay. It also means that's the end of the buying market. It also means the start of a downtrend. Okay, so remember that. It's the same thing, but just remember what it means. Understanding what that means will allow you to take the trades with more confidence. All right. And then write down also, where do I take my sell with a bearish engulfing price action? Or where do I look for a bearish engulfing? Okay. You will look for a bearish engulfing doing an uptrend when the market gives you a double top. That's the first area it's going to give you, a double top or a triple top. The next question you want to ask yourself is, where else can I look for a bearish engulfing? Okay. You want to look for a bearish engulfing doing a retracement, a small uptrend, a retracement of a break and retest of an uptrend. Okay. Of course, I'm gonna show you an example of that. So, but these are questions you got to ask yourself. Okay. These are rules you're gonna follow when it comes to trading the bearish engulfing. What is it? It's a selling price action candle pattern. What does it mean? It means the end of an uptrend. It means market's going to sell. It means reversal of in the market. Where to look, or where do I look for it? At a resistant area where market's at a double top doing an uptrend, or at a resistant area where market breaks a higher low and retests a zone, which means it would have been a support zone. Okay. It would have been a support zone being broken, become a resistant, or it could have been a resistant zone that got hit as that got retraced, become a support, broken, in turn become another resistance. So resistance zone, market breaks above, give you a higher high, break below, come back and retest. Of course, I'm gonna go over that. All right. What does it mean? A break and retest of a zone means the market's going to sell. A double top means a 50% to 65% with price action, mean the market's going to reverse, of course, with price action. Okay. All right, let's go ahead and take a look at it, of course. Let's see. All right, so let's just go over an uptrend. Doing an uptrend, of course, market got to give you a higher high, a high low, meaning that low is lower than the previous higher. That low is higher than the previous low. Another higher high, which means that high is higher than the previous high. Again, another high low, which means that that low okay? That low is higher than the previous low. Higher high. Again, another high low. Again, higher high. Higher low. Another higher high, but the only difference is this higher high is at the same area the last previous higher high was. And yes, it is considered as a higher high, but at this very moment, we realize that market is not breaking the previous high, but instead it's respecting it. For confluences, okay, that's a double top. If you're using your RSI, which you're gonna find out how to use in the next videos, market will look as if it's divergent. Okay, you will be looking to see if your RSI is at the 75% or 85% looking overbought. Okay. Now, having a zone and having a trend line, the trend line, as you can see, indicating that the market is going up, right? Then when you have that zone at the last low, okay, if you pay attention, that low is within the same area where market previously went up, came back and retest, came back and retest again. It's not always going to be exact, but if you pay attention, it was once a resistance, okay, becoming a support, right? So now we have a support zone, okay? And then we have another support zone. Now, the reason why we have the support zones down here is because sometimes market will break both, okay? When market breaks both zones or just the first one, it will retest, okay? It will either retest the last one or the most recent one, which is right here, okay? So in between this, we like to call this slippage. So what we want is that trend line to get broken. When that trend line get broken, it will also break the zone, okay? When it retests the zone and also retests the trend line, that's the retracement that we look for to actually take a sell in the market, okay? And that's where we would be looking for a bearish price action for the market to sell, right? Now, let's go ahead and see how the zone would look like, of course. Well, right there for it to sell, just like so. And the price action will be right on top, all right? Now, we will have what I like to call the cheesecake. Of course, the double top, seeing the divergent, how market is not giving you higher high where the high is consistent with the top, like so, all right? It's not going any higher than that. Now, here is the price action, right? So we're gonna make let's make the red candle as a bullish candle, right? So market is going up like so, right? It's clearly going up, right? It hit this zone right here, okay? You had to get a bearish price action. So what I'm gonna do is I'm gonna place a bearish engulfing right here, okay? So this is this is the last candle that they give us, right? Nice bullish, nice bearish, right? I'm at a nice bullish, nice bullish momentum going up, right? Now we're looking for a bearish engulfing, meaning you want the next candle to engulf the previous candle, like so, right? So this right here is considered as a bearish engulfing because at this point right there, right, the last bullish candle got engulfed. So you will either pull the trigger based on where you got it, like right here, okay? Price action right there, bearish engulfing. If you pull this trade based off this double top, okay, I recommend that you place a very nice stop loss because you don't have a previous high to use, okay? What I mean by that is once you get this bearish engulfing, you are more than okay to pull the trigger for an entry. Now, what are the characteristics of a bearish engulfing, right? First, okay, the first characteristic you will get is the retracement aspect before market give you market exhaustion, okay? So the next candle will open like so right here, just like that. It will buy up. typically it'll go up 50% or sometimes 70% or more. The idea is you will wait, okay? You will wait till market go up and start coming down as a wick, okay? When market come back down as a wick, right? Of course, like so. When it come down as a wick, it come down as a wick, like so, right? It'll come down as a wick, just like so. And then once it gets to this area, right? Once it gets to this area right here, you'll pull the sell. Why you want to wait for the market to come back down to pull the sell? That will make you a conservative trader. Once it comes to this area, you pull the sell for the market to continue to fall. Now, keep that in mind that it may not sell. Well, first, it may not buy all the way up there, okay, for itself. But also, it may not sell all the way down off the retracement candle, okay? It might sell like so. But it's still the right trade to take, okay? Right here. When you take this trade, it makes you a conservative trader, meaning what? You didn't watch market go up against you. You wait till market go up, come back down, and take this trade right there. This wick right here is considered as retracement. And that is what I like to call market exhaustion, okay? Because market bought up and then they it got exhausted. It couldn't buy no more, okay? Because it's respecting, okay? It already got engulfed by the bearish market, by the sellers, right? And they start coming down as a wick. Once it comes back down to the same opening, that's where it opens, I will pull my sell and put my stop loss above, okay? Put my stop loss above. Now, preferably, right, I would like to use the previous high to place my stop loss, okay? The previous high, like so, right, to place my stop loss, okay? The previous high to place my stop loss, meaning my stop loss will go on top, like so. My stop loss will go on top of here, okay? Previous high. If I don't have a previous high, I want to place it on top of the price action, but preferably I like to put a nice 50 or 25 or 100 pip stop loss. Depending on my lot size, depending how far it is, depending how big the price action is. But preferably right there or above it, okay? Now, if the market gives you a nice little wick like so, right? I want to place it 5 pips above the wick. 5 pips above the wick, okay? Now, that is the conservative way to enter this trade, okay? Meaning this price action right here, okay? This price action right here, you will look for it right there, okay? Let me change the color real quick. Okay? You will look for this price action, bearish engulfing. Let me do this real quick, hold up. Okay? You will wait for this price action right here. Okay? You will wait for that price action right there after the retracement, which is the retracement right here at a lower high. This is a lower high because it's lower than the previous high. And not only that, it's a break and retest of the previous high low. Okay? It's a break and retest of the trend line to continue down. Okay? To continue down. All right? And one other way to enter this trade. Now, when market buy up, okay, if you have this bearish price action for the sell, if market open up and start buying up, you can take the trade up here, okay? You can take the trade up here. Why can you take the trade up there? Because you already identified the selling price action, okay? You expecting this candle to retrace. You already have the price action. If you take your trade, okay? If you take your trade up there, right? When market retrace back down, okay? When market retrace back down as a wick, okay? When it retrace down back down to here to the same opening area as a wick, you will be in that trade from the very top, right? Not only that, you will have a very, very minimal stop loss. Well, you will still have the same area as a stop loss, but it will be less pips. Remember, the only reason you're pulling the trigger right there is because you already identified the bearish engulfing, okay? You are being aggressive with it. So it literally makes no difference if you were to pull the trigger right there, or when it come back to pull it right here, okay? As an aggressive trader, pulling it up here, down there, or up here, makes no difference. As of a conservative trader, down here is the area where you want to take that trade because you want to wait for the retracement. Now, the reason why we have aggressive traders is because you don't want to miss out. Meaning when the market gives you a bearish engulfing, a lot of time it will not retrace, okay? A lot of time market will not retrace. Market will not retrace to the top, okay? It won't go up and fall down. A lot of time, what's going to happen is this. The next candle is just going to open, maybe go up a little bit, just maybe go up like so, okay? Maybe just go up like so, and then fall straight down, okay? Put that down here. It'll fall straight down without no retracement. And you will miss out on your trade because you was waiting for a retracement. Now, remember, it didn't matter if you pull it right at the close of the bearish, okay? Or if you waited for the retracement to come back down, your stop loss is still going to be at the same area, okay? The stop loss is going to be at the same area. So one thing that will help you be a successful trader and also a conservative / aggressive trader, what you can do is, when in doubt, reduce the lot size. Let's just say we have $100, okay? We have a $100 account. With that being said, we cannot take a $2 trade, okay? Which would be a 0.20. We cannot take a $20 trade, okay? We cannot take a $20 trade and place a 50 pip stop loss, okay? We cannot do that. Why? We are over leveraging, okay? That's 50% of your account, okay? That's a no-no, all right? Now, when it comes to trading, you need to be very mindful and remember position sizing, okay? Meaning check your capital, meaning how much money do you have, okay? And then determine your risk per trade, meaning determine your stop loss, identifying where your stop loss needs to go, which will allow you to properly select the best lot size. That way you won't over leverage, okay? Not only that, you will not be afraid of market going against you, and you won't think about, oh my God, I'm losing a lot of money, okay? The only time you'll be thinking about, oh my God, I'm losing a lot of money is because you are over leveraging. you are risking 50% in your account. When it comes to trading, okay, you need to have, when it comes to trading, okay, when it comes to trading, you need to determine your risk per trade, okay? It means that the maximum loss per trade, okay, these losses should never be more than 1 or 3% of your capital, okay? When it comes to position sizing, when it comes to position sizing, meaning identifying your trade, the setup with the price action, you need to identify your stop loss, okay? The moment you identify your entry, you will be able to identify your stop loss before this bearish candle close. As the market, as this candle come down to close, you should already recognize that, oh, this is going to be a bearish engulfing if it closed below this. And that is a selling price action. That is a reversal price action. This price action means the market is going to sell. It also means buyers are no longer in control, that sellers are in control. You should already identify from the close point, I mean, the engulfing point of this right here to the last high, how much is your stop loss? Okay. Of course, you don't know where it's going to close at, but you should already know if it get past this, how much is the stop loss? You want to identify that. That way you could place your stop loss. So once you identify that, okay, you know what? My last high is 50 pips. Okay, so I have $100 account. I want to make sure that my stop loss should never be, okay? Remember, my stop loss should never be more than 1% or 3% of my capital. You cannot, you should not risk more than 1 or maximum of 3% of your capital. Okay. I don't care if you had a $50,000 account. I don't care if you had a $100,000 account. I don't care if you had a $50 account. You should never risk more than 3% maximum of your account. Never risk that. Okay. Okay. Never, please. Never. That is a bad investment if you are risking more than 3%. All right. So drop your lot size. That way you could trade very, very, very effectively. All right. And you could literally document everything before you take your trade. So you have your trade journal. Okay. So we have a break and retest. Okay. Break and retest of zone. Okay. Right. Then we have a break and retest trend line of trend line. Ooh. Let me back up a little bit. Okay. You have a break and retest of trend line. Sorry. It's sluggish. Okay. Okay. You have a break and retest of a trend line. All right. Minus spelling or anything like that. So you got trend line, zone, both being broken in retest, and they both indicate reversal. Now, not only that, now you have price action. Okay. You have three confluences. Okay. Three confluences. Those are the confluences that you need. At least a minimum of 2. So in your trading journal, you want trend line break and retest, zone break and retest, and price action. Sometimes the trend line will be a lot higher, meaning the retest might be here, right? Up that zone, but you still got to have price action. So you always need to have zone and price action, okay? But it is best to have trend line with it, okay? Which indicate that the trend is reversing, all right? Let's continue. Bearish engulfing, break and retest. Let me clean up a little bit, huh? I don't know if you guys want to screenshot this. It does help, okay? And write down on your notes, okay? Um, bearish engulfing at a resistant area, at a double top, resistant area, break and retest. Sometimes you will get, okay? Sometimes you will get a break and retest that give you a double top. See that? It hit it more than once. One, two, okay? A break and retest that gives you a double top, okay? Respecting the resistance, okay? Respecting the trend line. Just so you know, a trend line for uptrend is considered as a resistant zone, okay? When it get broken, all right? But as it's going up, it's a support because it's supporting the market as it goes up. But once it get broken, it is considered as a resistance, okay? All right, so remember, positioning matters. Determine your position size for each trade, okay? Lot size, okay? Stop loss. How much is it? What's the distance between my entry and my stop loss? How many pips am I risking? Okay. I identify support and I identify resistance. Okay. To make sure that I'm pulling the right trade. Okay. And right there, I will pull my trade. So just to recap. Okay. Let me clean up real quick. All right. Sorry for taking too long. Down. Boom. I'm going to keep these there. Not all of them. Just going to keep this, that. Boom. Okay. Let's recap. Bearish engulfing. What do I need to know about the bearish engulfing? One, it means trend reversal. Boom. Bearish engulfing. What else do I need to know about it? I will always find, or I will always look to find bearish engulfing price action for the sell at a resistant area doing an uptrend where market gives me a double top. Okay, just to summarize it, bearish engulfing is a candle that engulfs a previous bullish candle. Sometimes a bearish engulfing will engulf more than one previous bullish engulfing, which make it a lot stronger, right? Once I identify my bearish engulfing, right, I know I could take that trade, right? That's one. What do I know about the bearish engulfing? Other than the fact that it means a selling is going to happen, or other than the fact it means a selling is going to happen, or buyers are no longer in control, or that sellers are in control now. When you get a bearish engulfing, the next candle will a lot of time buy up to come back down and retrace. So when you pull your sell and put your stop loss at the previous high, do not be afraid. If you wait for this candle to go up and retrace back down and pull it at the opening area, again, that's the next candle after the price action. You are waiting for market exhaustion, aka you are waiting for the retracement of the last of this candle right here, right? Of this candle, then to pull that. When you wait for retracement, it is very unlikely for the market to go ahead and buy up against you again because they already bought up, just selling back down. So you could take this trade right here as a conservative trader. As an aggressive trader, the moment you get this price action, you pull it, stop loss just go above. Okay. Now, one other way you can pull the trigger is when the market is buying up. You could choose to pull it when it gets to the 50% of the last candle of the bearish price action. Once it gets to 50%, you pull the sell and still put your stop loss above. Okay. The reason you put it at the 50%, you're just trying to minimize your stop loss. Okay. You're like from here to up there, that's it. Because you already have the price action. Okay. That's one way you can pull that. So when you get this price action, if you are in doubt, reduce your lot size. So one, bearish engulfing. If in doubt, right, reduce lot size. Okay, reduce lot size if you're in doubt. If you was gonna run with a $2, put 50 cents. Okay, okay. If you was gonna run with a $2, put 50 cents. All right. So when market buy up against you, when it comes back down to this area again, then you can put your $2 trade. Okay, that way you're not over leveraging. Okay, and also it ease out your doubt. It's only 50 cents. It's not as much. You could also put 10 cents. All right. Now, another thing you could do, again, when it goes up, you don't even have to wait for it to start retracing down. You could just pull your sell once you feel like it went high enough for you, above 50% or at the 50%, you just pull your sell, put your stop loss above. You could choose to put a 50 cent, okay? And then once they get back to the opening area, you put a $2, okay? Me personally, I'll put the $2 at the very top, okay? And put my stop loss above, okay? But don't over leverage. I will not over leverage right there, okay? As aggressive as I can be, I'm still gonna reduce my lot size and pull the trigger, and it will fit if just in case if it does fall without me, and if it does go up, I'll wait. Okay, if it goes against me, I'll wait. Once it comes back down, and I'll pull the same. I'll pull my heavy lot size. Okay, so one, when in doubt, minimize your lot size, and once it comes back down, then take your regular lot size. Make sure you put your stop loss at the last high. Okay, please, 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 please. All right, now this is the price action because you missed this entry and the market closed right here. Market closed right here. It does not mean your trade is not valid. You can still take the trade. Please pull the trigger. Please, 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 please. Okay. If anything, a second bearish candle just validate the bearish price action. Pull your trigger and put your stop loss above. Yes, I understand that your stop loss is going to be a bit bigger. I understand. I truly do. All right. I understand your stop loss is going to be a bit bigger, but that's just what it is. Okay. That's just what it is. Pull your trigger. All right. Once this candle closed, pull the trigger, put your stop loss above. You will be just fine. You will be just fine. It just means your stop loss is bigger, but you will be just fine. Please. Okay. You should be just fine. All right. Let's see. When it comes to the trading plan, your setup, remember, break and retest of trend line, break and retest of zone, or your number one trade. Okay, right here. Price action, selling bearish engulfing should always be taken at a double top or triple top, either from the original top of here. It's a 50-50 trade, okay? Because the trend have not been broken yet, okay? Right here, it's a 75 to a 95% winning rate, okay? Stronger because the trend is broken, all right? When you watch this video, please comment and ask questions, all right? You need to interact with this video. Try to watch it more than once, pause it, that way you can have a better understanding of the price action itself. And also, remember, page 16 is the first bearish price action, okay? Please read it thoroughly, okay? One of the things I would like you guys to read, of course, on page 17, where it does give you an example of the bearish price action, is pretty much the first paragraph at the very top, where it says, this pattern tell us that sellers are in control of the market. Okay, make a note of that. when you get the price action, understand it means sellers are in control of the market. Okay. So when this pattern occurs at the end of an uptrend, at the end of an uptrend, okay, the end of an uptrend is at a zone, a resistance zone, either at a double top or at a break and retest double top. Okay, at the end, right, at the end of an uptrend, this indicate that buyers are engulfed by sellers, which means, which also signal reversal. Okay. And also remember at the very bottom, try to read the last paragraph of page 17. You cannot trade every bearish price action, bearish engulfing to be particular. It has to be in confluence with more than one technical analysis, okay? Meaning you need a zone trend line to get broken, all right? And again, once you watch the RSI video, you will understand divergent, and you will understand when the market oversold or when the market overbought, meaning the market bought so much it should start selling. All right. And I'll see you guys on the next video, going over the next price action. All right. Thank you.
If you want to truly master bullish and bearish engulfing, if you want real structure, real entries, and real confidence, the only price action you'll ever need. The ultimate price action available on Amazon now.